Thank you all. Thank you for joining. Thank you all. Thank you for joining on the Sunday morning. So again, as Raghuveer said, and thank you Raghuveer and thank you Sunil for approaching me to give this seminar. Again, my name is Prabhakar Reddy. I'm a chartered accountant, as Raghuveer said. I practiced in Hyderabad for 6 years, but when I really came to USA, I passed my CPA exam and thought, being the CA expertise and the CPA expertise, what is the niche area is a lot of people, they can really do the taxes in USA, but the people are not really thinking aloud about what are the things which they are really connected with India. Everybody from India are in particular, the Hyderabad and the Andhra Pradesh. We do really have the connection. We do really have, the income aspects of that, but the primarily with my experience, I can say that the people are not really following what the law says in the USA. Let us touch base with the 2021 taxes, which has been in progress right now. And then I touch base on the TEBA regulation and Indian taxation, what needs to be done and what can be done. Next slide, please. There are not a lot has been changed from 2020 taxation to 2021, but the American Rescue Act, which has been enacted in 2021, there are a couple of things which is really coming to the existence, which really touched upon everybody's the taxation issue. The one is if you're the married filing joint or the individual, which has been less than $75,000, everybody has received the $1,400 during the March 31st to the June timeframe. The lot of people they received it, and some of them they have not received it because of the income limitation. One of the key impact of that is you need to report this amount in your taxes for 2021. The reporting in the sense it is not for the taxation purpose, but it is for whether you were eligible for 2021 or not. Even if you are not eligible for 2021, based on the income limitation, if you have already received it, that's okay. But if you are eligible for 2021, and if you are not really reporting it, and then you will lose it. One of the key element of this is why I want to really touch based on this is a lot of people, even when they have really received it, they do not know whether this is a EIP or whatever they call it as. They have received the majority of them, they form from the IRS that you need to really give to your CPA or your accountant, or if you're doing your taxes specifically, you need to mention it. If you are mentioning anything not right or correct, it will impact your current year taxation, and when IRS the process it, again, either you will have to really pay it back, or or you will get more refund. So to avoid that particular aspect of the confusion, just produce or have the documentation and give it to your CPA. And other aspect of it is the child tax credits, which has been increased. For that also, the government has given the advance tax credit for everyone received the money either in the bank account or, as a matter of fact, the checks also, some of the people, if they don't have the bank account of yours in their system. So for that also, IRS has sent a specific paper, 6259 or 6249. That also you need to really produce. This is if you have received more based on the income, you will pay it back. If you received less, you will get the more in current year taxation. Though these two, the documentation which is really new for each and every taxpayer, if you have it, then please give that to your tax preparer, or when you're really preparing on your own, you can really produce or you can really enter that. And one of the key element of it is, changes to the tail tax credit, whatever the extra sum which they are really referring, that is being applicable only for the SSNs. It is not for the ITINs. So in any circumstances, when you really file your taxes in 2020, if you file for your kit with the ITIN, if you have got the SSN, please update it so that you are eligible for that particular the credit, which will be a huge impact. The dependent credit, it is only the $500, as against it is almost like the $3,600. There's a lot of the difference which has been there. So the specifically, and even a lot of people I know that they applied for, the EADs and adjustment of status. If you have really got, SSN, please make sure that, you update your SSN. One of the key element is the itemized deductions. If you are itemizing the deduction, of course, your charity, whatever which you are really giving to any non-profit which has been registered in USA, you do really get the reduction for that. But even if you are not itemizing, and majority of the people now, they fall below the standardized, the deduction, even if they are itemizing. So it is better you take the standardized, but still you can really take the $600 for, the merit filing joint, even if you are taking the standard deduction. The some of us, maybe we are not eligible, a lot of H-1B people not eligible to get unemployment, but the last year what the law has done is, due to the COVID, they have given unemployment. They gave the exclusion of $10,200. So if any person who has received unemployment benefit in 2020, the 10,200 which has been excluded, the right now that particular thing which has been taken away. Next slide, please. This is the key element. Always I get the questions, and also a little bit the sticker shock for a lot of taxpayers when they really want to really file the taxes in 2021, or when they're really filing the taxes. Typically, what happens is, when your spouse started working for the first time, you invariably have to adjust the W-4 withholding. In other words, when you really started on your own without the spouse is working, or even if you are really married, you will say the married with the two the dependents or the two exemptions. When the spouse start working from 2020 onwards or 2019 onward, there is a different methodology of the tax withholding right now. In the sense of, under the W-4 form, it is specifically asked that if you are working for more than one job or two jobs as a family, you need to really mention that what is that amount which the other spouse is working. Otherwise, what happens is, you are taking the benefit of the married table, and also your spouse is also taking the benefit of the married table. So your deduction, which has been very less when you really file the actual taxes. Of course, the taxes have been paid either periodically on your W-2 or at the year end, I understand. But when it really comes to at the year end, you always feel that, okay, I always paid my taxes through my W-2, the why I am really paying it now. So the one aspect of it is, whenever your spouse starts working, please make sure that there is the element of, the change in your W-4 withholding in our W-4 withholding also. And also, when you have the income in 2021, if you have really paid the taxes while filing the taxes in 2021 April for 2020, you would have really paid certain amount of the taxes, either on account of the business income, the capital gain, or whatever it is. You're supposed to be paying the advance taxes. If you are not really paying the advance taxes in 2021 for the 2021 income, you are subject to the penalty also. So when we really file the taxes, automatically the IRS, the system, it automatically calculates. It sends you, the taxes to be paid based on the previous income and the current year income. So unfortunately, it is only second or third time they don't really waive any of the penalties, but the first time they do really waive. So make the due consideration as to the payment of the taxes periodically if you have the business income, and also if you have paid the taxes on W-2 while you are paying the taxes 2021, you owe IRS. You please adjust your W-4 withholding. Next slide, please. I get a lot of questions about the capital gain, about what is the capital gain rate, and we are selling the properties and what needs to be done. Of course, the capital gain, which is being, or the dividend which is being at a lesser amount of the taxation that we know, the one of the aspects which really dictates the capital gain is your regular income. In other words, if your regular income, the stated as the married filing joint 80,800, and you have the capital gain. And when I really say the capital gain here, you've got to really make sure that it is a long-term capital gain. And the long-term capital gain is gain on any asset which has been held for more than 12 months. So if you have the capital gain of the income which has been less than 80,800, you don't really pay any capital gain tax. But again, this is inclusive of the capital gains also. In other words, your only gain is capital gain 80,800 and you don't pay anything. You understand? But your capital gain is say $200,000, then you end up paying 15%. So though it is being dependent on the other income of the capital gains or your salary income, this capital gain is also been included while calculating, your gains. So typically the 99.9% cases, what happens is your long-term capital gain is being charged at 15%. Your dividend also is being charged at 15%. And since you are in the state of the Georgia, you will pay the capital gains to the state also, that is 5%. So if you selling any asset which has been less than 12 months, then that is the regular rate of taxation. It is not, the reduced rate of the capital gains. That just you keep aware of that, the fact. Next slide, please. As I was really stating this in the earlier earlier thing, your itemized deductions, which has been say some amount itemized deduction, which has been consisting of your mortgage interest, your real estate taxes, your charitable contribution, and also your income taxes and state and local taxes. So put together, these all things, if they exceed only for the married filing joint 25,100, then only you can really go for the itemized. Now we are at a point where the lowest interest rates on our house properties, and even when your property tax along with the real estate taxes, what you really pay, they have been capped. That is what has been called as the SALT, state and local taxes, capped at $10,000. So your $10,000 of the state and local taxes, and only when your interest which has been paid, which has been more than the $13,000-14,000, then only you can really get this kind of the itemized deduction. Given the 2 or 3% interest rates, you are talking about the $15,000 interest. You're talking about at least the mortgage of $500,000. So I get this question a lot. I'm buying a home. Will it help in the taxes? The answer is yes. Only when your mortgage interest really exceeds the more than $15,000-16,000. Otherwise, you will fall under the regular item standard deduction. So the buying the home in earlier cases where the standard deduction used to be 10,200 to 12,200 used to make sense for the taxation purpose. It is now the purely, it's you have to really consider a bit of what could be my tax benefits on buying the home, but you don't have to really buy only for the tax purposes. The second aspect of it is, if you really see your mortgage interest of only $3,000-4,000, you don't have to really enter anything into your taxes. Just your CPA knows or your accountant knows that you have mortgage interest of $3,000 only. So you don't have to really enter that. You don't have to take the extra step. Okay. Next slide, please. This is what I was referring. So earlier, married filing joint, the two spouses, they work. The state taxes, state income taxes are around the $5,000 to $6,000 each. If you're earning 100K, that is itself is 10,000, and you pay the real estate taxes, that is $5,000 to $6,000. There itself is $16,000, but they have been capped at $10,000. You cannot really go beyond $10,000. So that is one of the aspects, of the 2018, 2019 beginning, the tax, the 2018, the tax law which has been done. So that's why the itemized deduction which is becoming difficult. So make sure that if your mortgage interest exceeds 12,000 or 10,000, let your CPA or accountant knows. Otherwise, you can really ignore all these aspects. Next slide, please. This is one of the important aspects. Everybody or a lot of people whom I know, they touched upon the cryptocurrency. The one aspect of this particular one is now, as a matter of the main tax filing, you need to really say to the IRS whether you dealt with the cryptocurrency or the virtual currency transactions. If the answer is yes, and then, or if you sold or buy, you need to really provide the information. Some of the agencies, some of the companies, the Robinhood, the Vanguard, some of the companies, they are really producing the cryptocurrency, the 1099B. Even if they are not really producing issues, it is your job to let or to enter that particular transaction. Even the conversion from one currency to another currency is also considered as the same. So if you're converting that currency or selling that currency, you know that for what you are selling, but you need to really make sure that what is the cost also and when you really bought it. So typically, just don't download the documentation and just enter or give it to your CPA. Just make sure that what was that amount which is being you got it for converting or selling, or what is the cost which is being at which you have been sold. It's very important because the stating that just ignoring that particular aspect, when tomorrow IRS will come to know about it that you dealt in the cryptocurrency, if you're not declared, then you are subject to a lot of penalties. Next slide, please. This is one of the important aspects. Whenever your income exceeds more than $225,000, there is something which has been called net investment income tax. This is primarily on the passive income, in the sense of, say, your W2 income, your business income exceeds 250K or 225K, and then you have the capital gain, you have the interest, you have the dividend, and also rental income. If this income is being added to it, excess of 225K, then you will be paying 3.8% of investment tax. So whenever you are selling a capital gain, of course, you have a capital gains tax of either 0, 15, 20% that I understand. Apart from that, the more is the capital gain, and then you will incur this particular net investment tax also. So aware of that fact. So there are a lot of transactions which has been incurring in India on account of the capital gains. So those transactions, of course, they will be taxable in India. And once you are really getting that money or not getting that money, once you sold the property and having the capital gain, you are subject to this 3.8% tax here also. And also aware of that fact, of course, whatever the tax which has been paid in India, you will get the credit. But apart from that, you are subject to this 3.8% tax, and also you are subject to the tax of the state income tax, which is in Georgia or whichever the state which you are residing. Next slide, please. The retirement, the planning wise, for 2021 already has been gone. At least for 2022, you have the 401k, the plan of 20,500, and also if the person is over and above 50, they can contribute the catch-up contribution of 6,500. Still, you have the time to IRA, to Roth and SEP IRA, which can be done before the filing of the tax return, that is April 15. SEP, you have time till September also, but the Roth and IRA, you have the time. I get this lot of question about the Roth. Roth, you are eligible only in certain circumstances. Either your income is less or you are not participating on the 401k of your employment. One spouse is participating, another spouse is participating. There are complex rules and regulations regards to it. But if you want to really participate in Roth, there is a way always. The way in the sense, you can contribute to the regular IRA, though you are not eligible. But what happens is, when you are not eligible to participate in the regular IRA, still you are putting the money, that automatically becomes non-deductible IRA. That means you're not really getting any of the benefit out of it. Then immediately you can really convert that into Roth. So the people call it the backdoor IRA. The Build Better Back Act, which wanted to really address this particular concern, because a lot of wealthy or a lot of people who have got good amount of the income, they were doing it, but the bill did not really pass. So as on date also, if you are participating on the 401k, still your income is more than 190, still you can really put the money into the Roth, but put the money first into the IRA and then convert that into your Roth. So take your accountant or the CPA help so that they can help you. Next slide, please. This also the one of the interesting the aspects of the question I always get. People do give the gifts, people do take the gifts. So what is the taxation structure in the US? If any person is giving the gift, whether he is taxable or the person receiving the gift, he is taxable. These are all things which you need to really understand. What the law says is, in your lifetime, what you can really do is, you can really give to the extent of $11.7 million, say. That is exclusion. So your estate and everything included, if your kids are getting that, up to $11.7 million is not taxable. But what happens if you're giving a gift to typically 4 or 5 people? That is, again, you are being a resident of the USA, you are giving the gift to another residents of the USA. So up to $15,000 per person per recipient. In the sense, the same person can give the gift up to 4 people, 15,000, or 5 people, 10 people, if you have the sources, up to $15,000, and nobody has to report anything. So that is not taxable. But any person who is giving the gift, so as a person, you are giving the gift of say $16,000, what happens? You are giving a gift of $16,000 to one person, and the rest, another $15,000 to other 3 people. So what happens is, you need to really report that to the IRS under the gift tax return. The person who is receiving that, he doesn't have any action on that. Simply he can ignore that. But whenever you are receiving such kind of the amount, because the money which has been coming to your bank account, you need to document stating that this amount which has been really taken as a gift by a written confirmation from the person who is really giving, that is the donor. So the donee has to really take the documentation so that he can substantiate that it has been given. So any person who is been outside of the country, say for our all the regular things, we are all from India, and any Indian who has been giving the gift to a person who is a non-resident of India, that is us, what happens? You can't really take any amount of the money which you are really receiving as a gift, because the person who is not connected to US taxation, the person who is giving from India, he doesn't really report anything. But if you're receiving any money from a person who is not connected to USA, the amount which has been more than $60,000 in a year, you need to report in your taxes. It is only, again, reporting purpose. It is not the taxation purpose. So simply you will report stating that, okay, X, my father, Y, my father-in-law, mother-in-law, whosoever it is, has given this kind of the money, and this has been sitting in my bank account. So if you are not reporting such money, then what happens is you are subject to the penalty. So whenever you are receiving the money from anywhere in the world, not from the USA, document it, stating that you have received it. And if a person is giving from India, say $50,000, if he has the source from India, it is pretty easy to write a gift deed and stating that out of love and affection he has given that money, and there they notarize and they send it to you. You keep it in your records, and whenever IRS asks, when there is an audit, you can always state that this is the money which I have received, and you won't be any subject to the taxation. Next slide, please. The kids who are going to the college, there are 2 credits which has been applicable. The one is what is being called as American Opportunity Tax Credit, that is for the undergrads. And second one is which has been called Lifetime Learning Credit, that is for the people who are already done their graduation. That means they completed their 4 years of graduation. But one aspect of it is you always have to remember, when you really married filing joint, if the income is been more than AGI before deductions as to itemized or standard, if your AGI which has been more than 160, you are not eligible for these two taxes. So the one of the criteria which you need to adopt always is, if the kid, typically the college going it, either before going to the college or during the college, they do on some, either 1,000, 2,000, 5,000. If they're earning, considering them filing a separate tax return, take out from your taxes. The why you need to take out from your taxes. The reason is, if the kid is over and above 18, the what maximum you get is $500 out of the kid. Okay, over and above 17, not even 18. You get $500 as a dependent deduction, dependent credit. But if the kid is filing on its own, depending upon the income, the kid get at least $1,000. So that is one way. Second is, if the income is more, say if some of you have, say, corporation, stuff like that, make sure that you issue, for helping you for accounting, running errands from your company, give them a 1099 for say $10,000 to $12,000, and then you get the deduction of $10,000 to $12,000 in your taxes, and this $10,000 to $12,000 has been included in your kid's separate tax return, and then he doesn't really pay any tax other than the Social Security and the Medicaid. So this strategy always helpful. And this year also, because your income limitation, if the kid was there in your taxes last year, if your income is more than 150, the economic impact payment, which has been either reduced or taken away. So this year, if you are really filing your kid tax return, then still you will get that money. So if you have the opportunity, then consider the filing the kid separately. The second thing is the 529 plans. The 529 plans, which has been applicable in Georgia and various other states. I get this question, okay, if I'm putting the money into the 529, whether my kid is eligible for the college education, the scholarship. I have not seen a case where the kid has the money against 529 and they are not being eligible. So what you really hear on the typically on the streets, on WhatsApp groups, okay, don't put the money, lot of money into the 529, the kid is not eligible, that proved to be a bit untrue. The important aspect of this 529 plan is when the kid is young, when you are really starting at young age, that grows tax free. Of course, the moment you put the money into the 529 plan, what is your ROI is at least the state tax rate that has been 6%. So in Georgia, per kid, per parent, you can put 4,000. That means married filing joint, husband and wife, they can really put $8,000 per kid. So irrespective of anything, the benefit what we really get is 8,000 times 6%, that is $480, which is your ROI. Then that grows tax free. The money which can be interchangeable between the kids, and of course, if the kid is smart enough where you don't have to really pay, or the college is good enough where they can really the sponsoring the kid, and then you can withdraw the money, and withdrawal of the money, then you will pay only on the increase, and the boarding and other things also can be used from this 529 plan. So consider this particular aspect. Still you have the time till 4/15 to make this investment. Next slide, please. This already I touched upon. Once you are really running the non-profit organization, you know that you need to really provide a certificate to any person who is really giving more than $250. For taking a charitable deduction, one of the aspects everybody needs to understand is, it is not the money what you really give to India. It is the money what you really give it to a profit organization which has been registered under USA. Just make sure, because I get this question, okay, I've done a lot of charity in India. Of course, you may have done, that is really good for you. But the thing is, if you want to really channelize through a non-profit in the USA. Otherwise, you will not really get the deduction. Even if the money which has been directly gone from your bank account to India and other charity organizations. And the giving 20 or 30 non-cash deduction sheets, either goodwill, it doesn't really help you. Let me tell you this way. They are all, whatever the clothes you give, whatever, everything which you give, as per the IRS, the deduction list, when you really give a MacBook also, it won't really give more than $100 used MacBook. So you can take up to $300-400 as a non-cash, but don't depend on only, okay, I've given my furniture, stuff like that. If you're given your furniture, if anything which has been more than $500, you need to document when you really bought that. What was the cost? What was the bill amount? What is the today's current the market value? So be mindful of these things. Okay. Next slide, please. Please make sure that today especially the people who have really started the LLCs, that during 2021, when they are really filing the tax return, their due date is not April 15. Of course, single member LLC, not S corporation, is still April 15. But single member LLC with S corporation or the LLC with the multiple members, your due date is March 15. The one of the aspect is when you really start an LLC, if you have an activity where you are getting the benefit either on account of the losses or the expenses which you incurred, you need to really file at least the extension by March 15. If you are not filing the extension and you are filing the tax return on April 15 per person per month, and per month is been counted as the during the month and the next month, in the sense of the March 15th is the due date. It is not till April 15th 1 month. IRS considers it as March is a month and April is a month. So per person per month, a penalty has been imposed at $195. So make sure that if you are getting late, please file the extension by March 15. And April 15, this year is April 18, but typically take it as April 15. When you're really filing the extension, you're filing the extension only for the filing of the taxes. Be mindful of this particular fact. It is not the extension to pay the taxes. So if you have a liability and you owe the taxes, if you're not really paying by April 15 per month, you are subject to penalty and the interest. Penalty is 0.5%, that is half a percentage, and the regular, again, the interest rate. So make sure that, you need to really file your, or at least pay the taxes to the extent of 100% before the due date. And one of the important aspect is the FBAR, that is the FinCEN. That is also the due date is April 15, but there is automatic extension of 6 months. Even if you are not able to file the FBAR by April 15, it doesn't matter. But at least you need to really pay the taxes. FBAR can be filed before October 15th also. Okay, next slide, please. So this is another important aspect which I want to really let you guys know. There are not many of the changes in 2021 taxes with regards to the taxation. But the NRI taxation is one of the important aspects which we tend to ignore, or not tend to, which we are not, the good word is not know, because we are ambiguous. We don't know what needs to be done or how it needs to be done. The fundamentals of the taxation in any country is very simple, if I have to really put it this way. If you have any income in any country, irrespective of your residential status, in that country, you have to pay the taxes. Okay. So if you have income in India on account of the rental property, on account of the capital gain, on account of anything, you are subject to the taxation in India, though you are a non-resident, non-citizen in India. You will pay the taxes in India. So the due dates are different in India. Here we follow the calendar year, they follow the financial year. But the technically speaking, whenever you are incurring any sort of the income, you have to pay the taxes. When you really pay the taxes in India, what are your responsibilities being a US resident? I'm not talking about US citizen or the green card holder or the EAD or whatever you call it. What are your responsibilities being a US resident? The simple aspect of it is you are subject to the taxation on your worldwide income. That means, what are the taxes which you paid in India? That income is again taxable in US. But that amounts to the double taxation, right? In the sense of you pay the taxes, again you are paying the taxes here. So what the law says is, India has double taxation avoidance agreement with the USA under the Article 91. The taxes what you paid in India, you get the credit here. It may not be dollar to dollar. It is not exactly what the taxes which you paid and you are getting the entire credit. The reason is, what are the taxes which you paid in India? You are paying, if you are paying as a capital gain or anything which can be taken into account here again. So to make sure that you pay the taxes there and you get the credit, but whatever is the taxes what you paid in India, you may not get dollar to dollar. The reason being, there you get the standard deduction again, but you already got the standard deduction. The variation of 1 or 2% will always be there. Next slide, please. And I think the whosoever is participating out of each and every one, we do have the bank accounts in India. 90%, I would say, they have the bank account. The interesting aspect of it is, if you have a fixed deposit, even if you are not really taken out the money from the fixed deposit, that is taxable in India and that is taxable in USA also. Though it has been recurring, the money which has been really taken into account, again added back to the fixed deposit, that all I understand. But income which is being taxed, the interest income is being taxed based on the accrual in USA and India also. That is one aspect which you always have to be mindful. Let your CPA knows that you have a fixed deposit and this is the interest which you are on. Of course, depending upon the calculation, it may not be accurate to the extent of 100%. Even if you're accurate 90-95%, that should be okay. But one thing which you have to really aware of this fact is, the bank account when you have in India, you need to declare that bank account in the USA the moment. Either one account, combination of the accounts, where your maximum balance which exceeds $10,000 at any given point of the time. It is not the balance as on the year. It is the any time. That means take the calendar year of 1/1/2021 to 31/12/2021. You see your bank account and see that where the maximum balance has been there under all the accounts. You write down the maximum balance and then say that, okay, my maximum balance exceeds in one account or the combination of the accounts more than $10,000. You have to declare all those accounts. So these ones, which is really important. Sorry, the date which has been 30th June, which has been mentioned, that is not right, which has been 4/15, and then you have automatically given extension for 6 months, that is 10/15. Next slide, please. So it is not only the bank accounts, even if you are a signatory on any of the bank accounts. That means your brother has a company, you are a signatory, or you open up a company, but you are not a director or the shareholder, you are a signatory. Those all things also have to be declared. You have a life insurance policy, the cash value, that needs to be declared. Your provident fund, when you started working in India, that needs to be declared. You are having any signature authority, that needs to be declared. And again, when I really say this is only declaration, it is only declaration, it is not the taxation. You are saying that to the IRS, okay, I have a bank account in India which yields either interest or no interest, but this is not my bank account. That's what you will say. It's pretty easy to file. It is not very difficult. You can really go into the BSA e-filing system and you can really file it. The IRS is Department of the Revenue and EBAR is Department of Treasury. So both are the two different systems. When you file your tax return, it's not automatically your EBAR is being filed.
No,
Make sure that you declare that under the different system. So even if you really Google it, the EBAR BSA e-filing system, it will pop up. It will give you very, very simple information as to, you know, what is your name, address, social security number, what are the bank accounts, then, you know, what are the bank accounts, what is the maximum balance. That's what you need to do. Next slide, please. This is what also I get a lot of questions. Real estate property is not your the EBAR. Real estate property, if you have the rental property, homes, houses, and whatever you call it as the land, vacant land, you don't have to declare anything. You don't have to declare the foreign currency where you have the dollars in India. You put in, you know, in your lockers. Say you don't have to declare. Jewelry, cars, nothing needs to be declared. Next slide, please. What I strongly suggest is, if you have not declared EBAR till today, at least for last 3 years, you go back and you see that what is the interest if you on, you amend your tax return, you file your EBAR. IRS considered it as, you know, non-willful offenders, and if they really come to ask, they may ask you to pay the fine, but I have not really seen that. But if they really feel that you got the good amount of the money in the fixed deposits and you have got a lot of banking transactions, you're not declaring them, then you will be considering it as the willful offender. Then you are subject to the penalty which anybody cannot afford. That is 50% of the balance, which has been maximum balance on the account. And the willfulness has to ignoring the taxation or avoiding the taxation, then you are subject to the criminal penalties also. So the mind, just go back and see that what can be declared. And if you have a lot of interest, declare that interest also and file a bar now. It asks why you are not really filed. The simple reason is you don't know. Ignorance of the law is not an excuse, I know. But in this situation, I don't really talk anything about it. Next slide, please. This is what I was saying. As long as IRS is not asking you to file the bar, you are okay. You can file now. But once IRS is contacting you by mail to file the bar, then immediately you need to really take the, you know, help of a tax professional to file it. Otherwise, it would be a very difficult scenario. Next slide, please. This is what I get a lot of questions. I thought that you will be interested in knowing. If you are opening up a company, people say, I'm opening up a company, I'm using my home for the office, I can really pay to rent. But of course, you are paying the rent from your company to you, but the rent becomes deductible in the company, but it becomes the taxable. So it doesn't really help you. But using your home for the office purpose, proportionately expense it out, that should be okay. So, but paying the rent to yourself, it doesn't really help you. And can I book the tickets, my in-laws? You can book, but there is no tax code which can really deduct it. Private school fee deduction, which has not been applicable. Payments made from the company for the personal credit card, you can always do that, but you need to document it. Earned income is NRI account, which has been exempted there. You don't have to really pay the taxes there, but still you need to really pay the taxes here. Do I need to have the receipts? The answer is yes. If the expense is more than $75, you need to really have to have that particular receipt. Down payment for the residential property, it is not deductible. Even the closing cost is not deductible. Your rental property, once you're really buying a rental property, the first closing cost, it can be amortized. But the subsequent, the closing cost, not the down payment or not extra payment of the loan, but the closing cost is deductible on the rental property, subsequent refinance, but not when you really buy the home. Again, I told you earlier, the spouse and individuals working, please make sure that your W4 withholding has been done, because typically the first thing what I really hear is we don't really pay 100% of the taxes advance, and when we really pay during the April month, you are subject to the penalty. And a lot of times what happens is, as a CPA, me also, we tend to ignore the calculation because unnecessarily payment of the interest. You will receive a sort of the penalty notice from the IRS. If you receive any notice from the IRS which has been $50, $60, just don't waste your time on talking to your CPA, talking to the IRS, just pay it off. But after April, you're filing the taxes, you're not paid the advance taxes, and you are getting the penalty notice which has been launched into the hundreds, and when your tax liability is in hundreds, of course, then at that point of the time, talk to your CPA. The first remedy, what you can always do is when you receive that kind of the notice, the number on the notice, you can call them and ask them the waiver of the penalty. Just say that, requesting it as the waiver of the penalty. If your record is good and if everything is good, they'll waive it. Otherwise, you got to really give a substantial the information as to the waiver of the penalty. Next slide, please. This married versus filing joint, in my experience, is always married filing joint is beneficial. Only when you have a lot of medical cost pertaining to one particular individual, only that point of the time married filing separate makes sense. Otherwise, it doesn't really make sense. Interest rate paid on the foreign home, that is deductible if you are using that home for your residential purposes. That means you includes your you and your parents. And then deduction for India travel. If you are traveling, your spouse, your kids, there is no code in the law which says that you can deduct it, but you have a business. If you can substantiate the fact of this travel is for partly personal, partly for the business improvement, then you can really take it. A dependent parent visiting USA, if they live in the calendar year for more than 182 days, you can apply the TIN number, but the benefit what you get is only $500 per parent. The marriage expenses, gold purchase, these all things, I got the questions. That's why I'm letting you know they are not deductible. Next slide, please. This is interesting aspect of which I want to guys should know. That typically what you get in the mail is that you have to really pay this amount of the taxes. They give the information. They call it as a mail audit because there is a discrepancy between the tax return, what is being filed, and what IRS has required. So the first, when they really send that notice, go through the notice. What they are really asking about. Either it is for missing of W2, missing of interest, missing of 1099B on account of the capital gains or stuff like that, go through it. Then combine the documentation and give it to your CPA or amend the tax. That is one way. That is a very simple, and say that okay, there is a discrepancy between the information what the IRS has. What you have is now you are reconciling and filing your amendment of the tax return. The good part of it is from 2020 and 20 onwards, even the amendment of the tax return can be e-filed. Earlier amendments have to be only paper file. But the main important other person is in-person substitute with the regular audit now. IRS will go through each and every transaction of your bank. You need to really have explanation about each and every credit entry what you have in your bank account. Somebody has given you the loan, somebody has given you the gift, somebody has given you or taken out money, or you sold the property. If you are not in a position to substantiate that particular entry, IRS will say that is your income. So whenever there is a credit in your bank account, make sure that you document that why that credit is being come into the picture or come into your bank account. You need to document it. The audit has been done after 3 years, right? Our memory fades, and we forget that why we have taken out that money. So what I would say is any non-ordinary items which is been reflecting and coming to your bank account, you need to document in a spreadsheet or stating that why you received that, so that you all clear when somebody is asking, IRS is asking about the question. Next slide, please. This is what I was referring to. If you do not prove the accuracy of the return, then you're done. They will impose the tax. So make sure that whenever there is a transaction in the bank, either it is, the logic is very simple. Either you have the income, or somebody has given the money on loan, somebody has given you the gift, or somebody given you the money within your bank account because you sold the property. Other than that, there cannot be anything, right? So what I'm saying is, whatever which is been, you put it as a note for yourself so that you can understand when IRS asks, you should be able to explain it. Next slide, please. I told you about this is more for the business people, where if you have any questions on the business taxation of this corporation, what are the tax saving strategies what you have, I can really explain. Okay, next slide, please. This is one of the important aspects. Is I strongly suggest all the people to take IP PIN from the IRS, and also now the credit freezing is very easy everywhere, so you can freeze your assets, freeze your credit. But the one of the important aspect which has been a little bit confusing to me also, the people tend to send their W2 based on the phone calls they receive to give the estimation of their refund. Just always remember the tax return, that based on the facts, there is no assumption in this. So if somebody say, okay, you give you your W2, I'll estimate your refund, they cannot really do anything other than plugging in. You can plug yourself your W2 into a TurboTax version and see that what is your refund. But don't send the information to the unknown, the tax filing agencies, or especially to India. Okay. The 90% and some of the aspects, these are all things which I'm saying out of my experience. Some of the people, they don't even review the tax return, they file the taxes. Some of the tax agencies, they send you only authorization forms, that is 8879 engagement letter, and they file the taxes. They don't even know. You guys, any person who is filing the taxes are interested in knowing either refund or how much taxes you pay. But more important aspect of it is, you need to really know what is there in the tax return. It is not the number what you are really dealing with that. So please do not send your information to the unknown. Somebody, I have seen one particular the agency, the guy who really takes all the tax filing, his name is not there in the taxes. He files as if you are filing on your own taxes. And of course, you are happy, the person is happy, because when you really check that out, your refund is 2,000, now you are getting 4,000. But the person is not really doing anything. He is plugging in all the wrong numbers on your name. So make sure that, what you are really signing on is right, because ultimately the tax, the preparer is not responsible. That is your tax, you are responsible for your taxes. If you really read the engagement letter, if you read anywhere, of course, we can really say that what is the stand of the law, what it says. But other than that, you need to review. If you do not really understand a particular line item, you ask the preparer or the CPA, what is this line for? But understand your tax return and then file it, not based on the refund. Okay, next slide, please. Okay, I can take the questions now. I think thank you a lot for listening patiently.
Yeah. Raghuveer, I put the questions in your chat window. You can ask. So far we have 8 questions. Thank you.
Prabhakar bhai, namaste. Ganesh here. What are the required documents?
Ganesh bhai, sorry to say, can you put your question in the chat? Raghuveer will be reading all the questions. Sorry.
Okay,
yeah, please.
sorry.
Please.
Yeah.
Thank you. Raghuveer, you can start reading the questions. Okay.
Yeah, sure. Just 1 minute.
Right.
So the first question is how much amount we receive from IRS? The question is not clear. So is it for last year the child care?
$1,400.
Okay.
$1,400.
Okay.
If it is a EIP, it is a $1,400 per kid. If it has been less than income is less than 150,000 for married filing.
Okay. The second question. We sold our house in New York in mid 2021 for 100K more than the amount we bought in 2016. We used the house as our primary home for 5 years. We signed a contract for the new house in January. Do we need to pay any taxes on the 100K profit?
The one thing which you need to really always understand on this is, if you are selling the home on a specific date, just go back to the 5 years from that date and just see whether you lived in that home for more than 2 years or not. If you lived in that home for more than 2 years, up to $500,000 for married filing joint, there is no capital gain. But you need to declare that. There is no gain on that.
Okay. Yeah, thank you. The third one is, do we need to file for FBAR every year or only on the year when you have more than 10K US dollars in that particular year?
Only in the year in which it exceeds more than 10,000.
So the next one, can the 529 amount, college 529 plan amount used for kids commute, be it a car or other means, not just for the tuition and boarding?
I'm not clear on that, but I can give a answer. The answer is no. It is only for the boarding and the tuition. I can double check that.
Okay, thank you. So the next one, gift money 15,000 per person, right? As a family, can we gift 30,000 USD?
Yeah, the person is, but it has to be on the different people.
Okay, thank you. About Zelle, Cash App or other Venmo money transfer apps, payments made from friends and known people, is this amount we have to show on the taxes?
No.
Okay.
It is only for the business which are really doing it, or the services. They are talking about issuing a 1099K, not to individuals and the business.
Okay, thank you. And the next one, how to itemize income on crypto and equity gains?
That's what I was trying to tell you. When you really sell that particular crypto, you know that what is that either you are converted and what is that you sold for. So you need to go back the cost of that particular one which you are really converted. If you are not able to do the cost, then apply the FIFO method, first in, first out, and ascertain the cost. So prepare a simple spreadsheet, the date of selling, the amount which you receive, the date of purchase, and then you can really say the cost of purchase. Cost of purchase, if you can ascertain, which can be linked to that particular crypto what you have sold, that's right. If cannot, then go as per the first in, first out.
Thank you. So the question, if a friend loans me 50K and I'm supposed to return it within few years, do I have to report it to IRS?
No.
Some technical, what is the IP pin from IRS?
It is individual PIN number, personal identification number. So if you really go into the IRS website, if you search it also IP pin, it will pop up giving you information. Every year it will renew and send a mail to you. And unless you use that IP pin, you cannot really file the taxes.
Thank you. The next question, 401k limit of 19,500 includes employer contribution.
What is that question again?
The 401k contribution limit of $19,500.
No, it doesn't include employer account. It is yours.
Okay. Next question.
It is your W2.
Okay.
Taken off.
Okay. Thank you. Interest from Indian bank, how to show? Indian bank also did TDS, not filing India returns.
India interest is very simple on a calendar year basis. If you are receiving a TDS certificate under the Form 16, it will say that what is the gross money which you have received and what is the TDS which has been paid. But the TDS is not the tax, right? Say, for example, a lot of us, we tend to not to really file the tax return because the TDS money which has been very less, or you don't really care about it. But when you really file a tax return up to $250,000, $300,000, 300,000 rupees, India, there is no taxation. So if you file the tax return, whatever the TDS which has been taken, it will get back. So the interest amount on what has been reported in the TDS can be reported in the US, but the tax, if you have not really paid, even if it is the TDS also, it is not deductible. So the easiest and better way is, what I suggest is, based on your financial year in India, you file a tax return, you get the refund of the TDS what has been done. That particular tax return supply to your preparer or prepared based on. So for example, we are in 2022 right now. So India financial year is say April 1, 2022, March 31st, 2021. You have filed the tax return in June 2021. You're supposed to file in June, but they extended till December, or still they are extending it. So if you have the tax return, the one which has been filed can be taken into account and we can really replicate that income in USA taxes.
Yeah. Thank you. Now the next one. Do we need to declare cash out of the equity from home refinance in the tax return?
No.
Okay. Thank you. What are the documents required to establish a company in India? Do we really need a FBAR to establish a company in India?
Both are not related. What are the documents which you need to be established a company in USA? In India, you need to talk to the CA in India. You being a non-resident alien, they talk about notarizing the document, a lot of stuff, and they have to have two resident directors in India. FBAR is not way, but if you open up a bank account after opening up a company and you being a signatory in that bank account, you need to really declare FBAR.
Oh, thank you. Any money investment in Indian stock exchange under NRI Demat account needs to be declared under FBAR.
Yes. I forgot to tell you, your foreign bank account regulation includes your securities also. Securities include your Demat. Securities include your shares in any bank account, any of the companies in India.
Thank you. Do I need to report Roth IRA account opened in 2021?
Yes, you need to declare that. Or at least you need to have the documentation. It doesn't really go into the taxation, but you need to declare it.
Thank you. How to get money from India on sold properties from India?
There are so many ways that you can really consult me, or you can talk to the India CA. There are either your father has the money or you have the properties. If you are selling, what is the money, how it has been coming to your NRO account, or what are the taxes? There are so many aspects, which if I had to really tell you, NRI taxation itself is going to be another presentation, you know. So, but you can consult me, I can really let you know.
The next one, it's a general question. Please explain capital gains in stocks.
Sale minus purchase is the gain.
Okay.
Simple, right? And 99% of the times, your trading company, either it is the Robinhood or E-Trade, Vanguard, Merrill Lynch, they give you 1099B. Make sure that the 1099B is been replicated.
Thank you. So this is the next question. My dad received green card this year. There's no income to him. Should we file tax returns?
It helps to file. If he has the Indian income, declare that and file it. Because, you know, you're not obligated to file, but it helps to file. Especially if he's in India, if in USA for more than 6 months.
Okay. There's a question about reference. Any good references for India tax filing for an NRI?
I'll let you know. I was a CA, chartered accountant. I started a firm in India when I was there. Still the firm is there, but they are really big now. There are 26 people. So if only simple tax filing, I can refer somebody. But if there is a complexity of the tax return, and then we can really refer to them. Okay.
Oh, yeah. Thank you. Next question. How to get property depreciation for primary and rental house?
Primary home, there is no depreciation. You don't really do anything on the primary home. Rental property, which is being depreciated over 27.5 years. You give the rent, and the rent minus depreciation is your taxable income. But whatever the depreciation which you are really capturing, when you really sell the property, you will pay the tax on it.
Yeah, thank you. The next question. LIC policy to be mentioned in FBAR.
Yes.
Yeah, those are the questions we have. Any other final questions?
Prabhakar, again, final question.
Yeah.
Yeah, if in case my father can give gift to 4 of us, myself and my wife and my son, 60,000 each, is it taxable or not? He can give
It is
60,000.
not taxable, but there is a declaration. A form called 706B or something, you need to declare in your taxes stating that a non-resident alien, he has given the money to you.
So is there a maximum limit, like 4 members means 2.4 crores, right? Sorry, 60,000 means 240,000.
Yeah, there is no maximum limit.
Oh, there's no maximum.
It's only declaration.
Oh, okay, that's great. Thank you.
Prabhakar Garu,
Yeah.
this is Anita. So regarding the LIC policies, right? Do you have to declare it the year you start it or the year they get they mature?
It is the cash value.
Okay.
So every year you have the cash value, right?
Uh-huh.
So if you surrender the policy on any day, whatever is the cash value, that you need to declare.
Oh, okay. Thank you.
ప్రభాకర్ రెడ్డి గారు ఇంకో క్వశ్చన్ అండి. ఇప్పుడు మన యుఎస్ లో ఉన్నాము. సో ఇఫ్ యూ పే లైక్ గివ్ $20,000 టు మై కిడ్ యాజ్ ఎ గిఫ్ట్, ఇస్ దట్ టాక్సబుల్ ఫర్ మీ ఆర్ హిమ్?
అదేముండదు. అదే అగైన్ ఏదైతే డబ్బులు ఇచ్చారో 15,000 లిమిట్, అంతకంటే ఎక్కువ ఇస్తే ఏంటంటే మనము మన ఎస్టేట్లోకి వెళ్ళి వెళ్తుంది. సో అది అకౌంట్ చేసుకొని పెట్టుకోవాలి అంతే. So every year, typically this question will arise only in case of, in case of giving the money to the kid on their college education fund, not paying to the college. Okay. If you are giving the money on the college education fund, so typically if anything which has been more than $15,000, just you need to accumulate and say that this is the money which has been given, because this entire money which has been more than $15,000, which is coming out of your $11.6 million. So there is no income for him. There is no whosoever receiving the money. There is no gift tax. So the ones that entire money which has been exhausted in 11.6, then there is a taxation. Okay.
Okay. So let's say example, we are paying the tuition fees for them. Is that
Yeah.
comes under that that limit?
Gift tax will come into the picture only when you really say it as a gift, right? If you are
Oh.
paying your tuition fee, it is not nothing. There is no financial transaction in it. Because as a father, yes, you are paying it. There is nothing needs to be stated.
ప్రభాకర్ బై నా పేరు కీర్తిధర్ అండి. హలో. అయితే ఇప్పుడు ఇండియన్స్ మన పేరెంట్స్కి ఏమన్నా మెడికల్ ఎక్స్పెన్సెస్ అయితే అది డిడక్టబుల్ చేసుకోవచ్చు?
కాదండి. ఎట్లా అంటే వాళ్ళు ఫస్ట్ ఆఫ్ ఆల్ మెడికల్ ఎక్స్పెన్స్ డిడక్టబుల్ కావాలంటే వాళ్ళు మీ taxes కు డిపెండెంట్ ఉండాలి. డిపెండెంట్ ఉన్న తర్వాత మీరు ఐటమైజ్ డిడక్షన్ చేయాలి. ఐటమైజ్ డిడక్షన్ చేసినప్పుడు కూడా 10% కంటే ఎక్కువ ఉండాలి మెడికల్ కాస్ట్. అంటే మీ శాలరీ సే మ్యారిడ్ ఫైలింగ్ జాయింట్ $1,50,000 ఉంటే $15,000 కంటే ఎక్కువ ఉంటేనే అది ఐటమైజ్ అవుతుంది. అంటే 20,000 మెడికల్ కాస్ట్ అయితే 5,000 డిడక్షన్ తీసుకొని మళ్ళీ దానికి రియల్ ఎస్టేట్ ట్యాక్సెస్, ఇన్కమ్ ట్యాక్స్, మార్టిగేజ్ అంతా కలిపి 25,100 అయితేనే తీసుకోవాల్సి వస్తుంది. సో 99% ఆఫ్ ద కేసెస్ ఇట్ డజంట్ రియల్లీ హెల్ప్.
డిపెండెంట్ గా లేనంత సేపు ఇట్స్ నాట్ ఎలిజిబుల్. సో
yes
ఓకే, థ్యాంక్ యూ బై సార్.
sure.
I think
ప్రభాకర్ రెడ్డి గారు, జనార్దన్ పన్నెల అండి.
జనార్దన్ చెప్పండి.
ఇప్పుడు మనకి అంటే రెంటల్ ప్రాపర్టీ ఉన్నప్పుడు ఎల్ఎల్సి అనేది అంటే కంపల్సరీ అది అవసరమా, లేకపోతే
అంటే యూజువల్లీ టెండెన్సీ ఏంటంటే ఒకటి మనకు పర్సనల్ అసెట్స్ ఉంటే
ఓకే
ఇది సూపర్లేటివ్ డిగ్రీ ఆఫ్ థింగ్. ఎట్లా అంటే అరే పర్సనల్ అసెట్స్ ఉంది, నాకున్న టెనెంట్ కు దాంట్లో ఏమన్నా అయిన తర్వాత నాకు రెంటల్ ఇన్సూరెన్స్ కాకుండా, నా లయబిలిటీ ఇన్సూరెన్స్ కాకుండా ఏమన్నా అయితే నా పర్సనల్ అసెట్స్ కిందకి వస్తారా అనేది ఒకటి థాట్, అంతే కదా.
ఓకే ఓకే
అది తప్పించి రెంటల్ ఎల్ఎల్సికి ఉన్నంతకు ఏం కాదు. యూజువల్లీ ఎల్ఎల్సి ఉంటే ఏంటిది అంటే ఎల్ఎల్సికి ఏదైతే ఉందో టు ద ఎక్స్టెంట్ ఆఫ్ యువర్ ఇన్వెస్ట్మెంట్ వాట్ ఎవర్ ద ఎల్ఎల్సి బి చార్జ్ యూఆర్ లయబుల్ ఓన్లీ టు దట్ ఎక్స్టెంట్. సో దే కెనాట్ రియల్లీ కమ్ ఆఫ్టర్ యువర్ పర్సనల్ అసెట్స్. So typically, if you open up a LLC and even if the individual name, that helps. It doesn't really help, but only in superlative degree of the cases, not in general.
Okay. Thank you, sir.
Yeah, sure.
Thank you, Prabhakar. There are 2 or 3 few more final questions. For married and filing jointly, the 401k limit of 19,500 is per individual or in total?
Individual.
It's for individual. So
ఈ ఇయర్ కు మీరు 20,500 అని తీసుకున్నది, లాస్ట్ ఇయర్ కు 90,500 అని, ఈ ఇయర్ కు 20,500.
for 2022, 2022, it should be 20,500, right?
అవునండి.
Yeah. Thank you. So other question regarding gift taxes. Want to give gift to my daughter who's 3-year-old, 5,000 gift, and
How
open savings account.
How old?
5,000 gift.
That's okay. How old is she?
3 years.
3 years.
You can give, but I mean, typically the bank account, the person can be only beneficiary, right? That has to be in your name, and you will say that person is beneficiary. You can give. There is no law which says that you cannot give. It doesn't matter.
Okay. Thank you. The next question: LIC policy has been there. I don't know to inform now. What is the way? Just only inform or inform on FBAR.
Yeah, it's only the LIC policy. That's what I was telling you guys. It is LIC surrender value. It is not the mature value. So as on date, if I surrender my LIC policy, what do I get out of it? If that has been more than, assume that is the only policy you have, and the policy surrender value is as on date or as on last year is around 8 lakhs, you need to declare it.
Sorry, Andy, just a follow up on that. So is it $10,000, more than $10,000 surrender value per person?
Yes.
I mean, like we. Okay. Oh, thank you.
So one more follow up on that. Say I put in like 10 lakh rupees, right, in the policy over last 5 years, and I cashed it out last year, right? So I need to pay taxes on the profit, right? On the
Yes.
Okay.
ప్రభాకర్ బై కీర్తిధర్ అగైన్ on the same question. Hello.
చెప్పండి.
అది ఇప్పుడు మనం పేమెంట్స్ చేస్తాం కదా, దానికి మీద మన ట్యాక్స్ రిడక్షన్స్ వస్తాయి ఎల్ఐసి పాలసీలో?
US లో లేదండి.
ఓకే, థ్యాంక్ యూ.
ఇండియాలో ఉన్నది కానీ ఇక్కడ లేదు. ఇలా సెక్షన్ 80 అన్నది, దాని ప్రకారం ఎల్ఐసి వేరే దానికి సెక్షన్ 80D మీద ఉన్నది కానీ ఇక్కడ ఏం లేవు.
సార్ ఇప్పుడు 25 years డిక్లేర్ చేయలేదు, అవన్నీ చేయాలి ఇప్పుడు మనం?
మీరు నాకు తర్వాత కాల్ చేయండి.
చేస్తాం. థ్యాంక్ యూ.
I think we have 2 more questions, right, Raghu, and we'll stop. I think it's
Yeah, 2 more.
Anna Prabhakar, why is the GATES member? Please give some deductions.
Deduction for what?
I'm joking.
No, we'll talk of.
Oh, you mean to say that tax filing fees?
Yeah, Ganesh here. Ganesh Kasa, yeah.
Okay, the next question. Yeah, Ganesh bhai, just please few minutes. Next question is, how much home loan interest amount per year can be beneficial for tax filings?
I don't know whether the gentleman was asked that question, whether he heard about when first I said about, the itemized deductions as against the standard deduction. If any interest which has been more than $12,000 a year, perhaps, you may get a couple of $1,000 or 1,500 back. Other than that, if it is less than $12,000 at least, you cannot really get any benefit of it.
Yeah, thank you.
That is also because, if it is $12,000 and with your state and local taxes, with the charity and everything, you will at a threshold of 24,000, 24,500. At least you can itemize the state. If you're itemizing the state, and then you will, instead of 6,000, they'll take this entire 24,000 and you get $1,000 more at the state return. And of course, on the delta of itemized 24,500 as against 25,100, the delta of $600 in the federal taxes, you pay 10% extra tax, but there is more beneficial.
Yeah, thank you.
Prabhakar Reddy, one more question regarding this, what is called charitable contributions. So there is something called, I heard that there is something called charitable account or something. So can you explain a little bit more about that?
You cannot really give the charity. Sorry, let me put in other words. You cannot really get the deduction in USA for giving the charitable donation to a organization which has been not registered under IRS. That means you give the money to anybody and that is a charity. I mean, if the person is great enough, he helps the person, that is good enough. Understand? But to put that under your taxes, that has to be a charitable organization which has been registered under the IRS under 501c. Otherwise, you don't get. That's what I was saying. So a lot of people, they come and they tell me that they give a lot of money to India out of their personal account. What I tell them is, find out an organization which can really do the charity in India, give the money to them, in turn they transfer, then you get the deduction. That's what I was saying.
Okay. No. My question is, sorry, okay. My question is regarding the, US only. They are legitimate, everything is 501c registered and everything. So because of this, high standard deduction, like 25K or something like that. So we do not get that, tax benefit, right? Even if we give the charity some money or whatever it is, $1,000, $10,000, $5,000, we don't get, the benefit out of it.
Yeah, now I got your question.
There
With
is
the
a
charity
account called
deduction, if it is been exceeding more than 25,100, you get that whatever the sum.
Correct.
Okay?
But I heard that there is something called, self-directive charitable account or something like that. I don't think I'm not giving the right name, but there is a account called.
So basically, charity under your personal taxes, more than anything, you can really give the deduction. If including the charity, if the amount is more than 25,100, you can get the deduction. If it is less than 25,500 also, still you can write off $600. But there are self-directed charity which I have not really heard of. I'm not expert.
One question, Andy. Is it 12,000 or 25,000 per year home loan interest?
అంటే 12,000 అనేది ఇంట్రెస్ట్ ఉంటే మీరు ఐటమైజ్ చేసుకోగలుగుతారు, బెనిఫిట్ వస్తుందని చెప్పారు. 25.
మరి 25 ఏంటిది కంబైన్డ్
స్టాండర్డ్
ఫైలింగ్
స్టాండర్డ్ డిడక్షన్. మీరు 12,000 కడితే మీరు స్టేట్ అండ్ లోకల్ టాక్సెస్ ఇంకో 10,000 ఉంటాయి కదా, అదొక 12,000 అవుతుంది. చారిటీ డిడక్షన్ కొంచెం ఉంటాయని చెప్పారు.
ఓకే
ఓకే.
I think, yeah, I think we are, the thanks, I think we want to close the call. Yeah, one last thing, thank you, Prabhakar, for taking your time,
That's okay.
for giving the sessions and valuable information and answering all the questions. So people from other states are asking about your information. So we can share the information which is on the, can you go to last slide, Raghuveer? Can you share the last slide if someone wants to make a note of the email address and phone number? And also, we have recorded this session. If anyone wants to get the recording, please send out an email to gatesatlanta@gmail.com. We will send it shortly, and we can also share the information. If any information about Prabhakar Reddy are required, we can share that information. But here are the details: the phone number and the email address. Yeah.
Thank you, guys. Take care.
Thank you for your time. Yeah, thank you all for joining too. Bye.
Sure. Take care. Bye.
Thank you. Bye.